Okay, mortgage rates just took a big jump. So what does that mean for home prices? And the big question is that going to price buyers out of the market? Is it going to prevent people from buying a house? Hello, and thank you for watching. My name is Wayne Turner. I'm a real estate broker here in the New Orleans area. And much of this information is derived from my 25 years experience in having closed over 4,000 houses. But enough about me. Let's get to the goods. Now, as you may know, the federal government has ceased to purchase mortgage-backed securities and federal bonds, and in doing so, interest rates have taken a jump. Now, this announcement came as no surprise as the consumer price index literally hit around, I think it's a little over 7%. And yes, that has caused mortgage rates to teeter around 3.75, literally taking almost a 0.75% jump in just a matter of 60 days. Now, if you're like me, you may agree that 3.75 is an incredible interest rate. 3.75, gosh, it's just way better than 5, way better than 6, not as good as 2.875, but what are you going to do? Now, if you wouldn't mind, do me a favor. Give me a subscribe, a thumbs up, a like, or leave a comment. You know what? Leave a comment and let me know, what were the mortgage rates when you purchased your first house? I'll go first. When I purchased my first house 29 years ago, interest rates, 8.25%. And I thought that was a really good rate. Now, an increase in a mortgage rate means higher payments. It means more money you're going to pay for the property. It means less you're going to pay down towards the principal balance over time. And it simply means you'll pay more for the house. You'll pay more for anything for that matter with a higher interest rate.
No, thank you. No, thank you.
And add, of course, the supply of homes being at a record low, it's leaving buyers competing for the same house. But let's get to the big question. What will happen to home prices? Will we see home values, home prices come down? And that truly depends on the buyers and the pace at which they're purchasing properties. Look, if buyers continue to purchase homes, prices will remain steady. We will still see a steady increase in home values as long as buyers are still buying. And I'm going to tell you, I've never seen, and I've been around for a long time, I remember selling properties back in the recession, and even during the recession, homes still were purchased. People still bought houses. Probably won't be as strong as it is or has been in the last 16 months, but people will continue to purchase property, whether it be investors, first-time home buyers, regardless of the age, the X, the Gen, the Y, the Z. It doesn't really matter. At the end of the day, there's only so many houses and so many people, and you got to fit the hole in the right peg, the square in with the buyer in the house to get it all to work. The question for many people like myself that have worked in the housing industry, the real estate industry, like back in 2007, 8, and 9, we seen that. It was pretty drastic. When will we see that bubble pop? And yes, we're in a bit of a bubble, if you will, right now. Think about this for a second. Even if the supply of homes met the demand at the pace that the buyers are purchasing houses, where it would level out, we would still see home appreciation. My concern is when we see the supply of houses increase and the demand for those houses slow quickly, come to an abrupt, it doesn't really have to stop, but if you're at a level out market where houses have come on the market and buyers are buying houses and all of a sudden they stop purchasing those houses, that's when it pops. And that means a decline in home prices. It's just really simple. When the buyer's demand diminishes, the prices can't remain stable. So in order to sell your house when your house is on the market and it's a buyer's market, you have to be more competitive. In other words, you have to bring your price down a little bit more to be more competitive. So we go from 16, 18, 12, 20 days on the market. I listed a house literally last week, had 3 offers in less than 3 days, and it sold for more than full price. We hear stories like that all the time, but the opposite will happen once the buyers slow down their pace. If the housing market hits here and it slows down and all of a sudden they come to a slow, then the prices go down. It's just, and no one really truly knows when and if that will happen. There's some markets that they've seen this market like this for 7 or 8 years where there's not enough inventory of homes on the market and there's buyers purchasing property, and it has increased and increased and increased and increased. And yes, can it pop? Yes. Will it pop? Of course. It's just a matter of time. The $1,000,000 question is when? So at any given time, we're either in a seller's market, a buyer's market, or a neutral market. Now, you know what a seller's market is, right? It's simply when you have buyers wanting houses and not a whole lot of houses on the market. And the opposite is true. When you got fewer buyers and a lot of houses on the market. Now, a neutral market, you're probably thinking, what in the world is a neutral market? It's when there's 3 to 3.5 months, no more than 4 months of inventory on the market. That means at the rate that buyers are currently absorbing those homes, in other words, the rate that buyers are purchasing houses to the market, it's absorbing those houses. So if not another single home was purchased, it would take 3 to 4 months for all those homes to be purchased and left with zero houses on the market. That's a neutral market. And what we see in a neutral market is we see a steady appreciation, anywhere from 3 to 4.5% in any given market. Now, the issue that we're faced in 2022, according to the National Association of Realtors, is that we are in a 5.5 million home deficit, meaning that at the rate that people want to purchase a home, they want to own a home, there literally needs to be 5.5 million homes for those people. Now, don't give up hope. If you're looking to buy a house, here's the positive, here's the good news. Building permits are up, home building is up, foreclosures are coming to the market. Unfortunately, I hate it with anybody that has to have their home foreclosed, but for a buyer, there's more houses that are going to be on the market due to those foreclosures. And then you have just the spring market. As we roll into the spring market, we're naturally going to have typically April, May, June. Those are the strongest 3 months of any housing market in any state, regardless of where you live. So will the interest rate hike? And Jerome Powell met today and they're announcing rates are going to go up again. So will the rate increase prevent people from purchasing a house? Not really. And here's why. The interest rate affects the amount of home you can get. It affects the amount of mortgage you can get to be able to purchase a house. It doesn't affect whether or not you can or cannot purchase a house. That's up to the buyer. That's up to, do you have the income? Do you have the credit? Do you have the cash reserves to put down? I repeat, the mortgage rate increase does not prevent you from buying a house. But it can, and it will, and it can prevent you from purchasing a home or a piece of real estate in an area that you desire. That's the difference. You can still qualify for a home, but unfortunately, it may push you in a different direction. It may push you in a smaller house. The rates increasing may push you in a home without a garage as opposed to with a garage. It can prevent you from buying a house that's walking distance to schools, shopping, coffee shops. Listen, there's no denying it. The closer you are to amenities with your home, the more property values go up. I wonder why that is. It's because the supply and demand. There's only so many houses that are close, that are walking distance, that are desirable in those areas. And everybody tends to want more of those types of properties. So you can still buy a house. You just have to get a little creative. Now, you want to hear something really crazy? The fact is, in 1981, mortgage rates were the highest they've ever been in the history of our country. Want to take a guess? 18.45%. Could you imagine? 18.45%. Now, here's what's interesting. Do you think people stopped buying homes in 1981? Nope. In fact, just a little less than 2 million homes were purchased in 1981. Now, was that down from 80 and 79? Absolutely, and quite a bit, but it didn't stop. My point is, people still have to have housing. And it's not so much the cost of the money, it's the availability of the money and the availability of the house. So look, this is why I produce these videos and I share this information. So it's not to doom and gloom, oh, the sky's falling and you're going to burn in hell. Don't buy a house. Look, at the end of the day, just because you buy a house doesn't mean you can't refinance the house. But at the end of the day, you look at some of the wealthiest people in the world, it's a forced savings account. When you purchase your property, you want to wake up when you're 55, 60, 65 at the latest, and go, you know what? At least my home was paid for. I never realized my home would be paid for, and it's worth $400,000. I paid $180 for it, or I paid $250 for it. Now it's worth $725. So here's what happens. Housing is just, it's a savings account. It's a forced savings account. And you want to get to the point in your life where you don't have to have a mortgage and all you have to do is pay taxes, because it typically winds up being 50% or more of a person's literally retirement. Now here's something that's really interesting. The fact truly is that the United States government is giving people down payment money to purchase a house. Yes, you heard correct. They are giving you down payment money to purchase a house in what they consider rural areas. Now, these areas are not in the boondocks. They're not out in bayou country. They're not in the sticks and the woods, and they're not in the coal mines, and they're not out just where there's no civilization. These are homes and these are communities that are just 30 to 45 minutes outside of a city, a major metropolitan city. I personally live in one of these areas. It's considered a rural area, right? But just over my shoulder here is Lake Pontchartrain, and I can be at the Superdome or Bourbon Street in the French Quarter in 40 minutes, but yet I'm in a rural area. Now, that's a good thing because I still have 2 Targets, Starbucks, Walmart, Home Depot, Lowe's. Yes, you guessed it. I still have everything, and I'm considered in a rural area. An area which, by the way, that the federal government is giving you down payment money. What type of loan is this? It's called an RD loan. That stands for Rural Development. And those loans are guaranteed and underwritten by the United States Department of Agriculture. Yeah, just like the farmland, right? But it doesn't have to be farmland. It doesn't have to be acreages. It can be a condo. And of course, if you're curious about these, we're going to put a link below in this video so you can click on that link and you can actually put in a property address, and that property address will show you whether or not it's in that area of which you can get a down payment assistance from the United States government to purchase one of these homes. Now, if you need an agent in that area, we also have a link. You can just fill out some quick information. Your information is always kept with us. We don't sell it, share it, or anything. But if you need somebody in your hometown that specializes as far as an agent in these types of loans and houses that are just familiar with it, we can help you with that as well. Oh, I forgot to mention, these properties are not in city limits. So when you're not in city limits, you don't have to pay city taxes. So therefore, you're going to be able to afford more home because now you don't have to pay the city taxes, or you just simply can purchase a home that you like and have less of a mortgage payment because you don't have to pay city taxes. There is a caveat here. You can't make too much money, and you're probably thinking, well, what is the cap? Well, listen, it's going to vary county by county. And a big question you may have is, Wayne, do you have to be a first-time home buyer to purchase these homes? No, you do not. You can have purchased 5 or 6 houses before in your lifetime. You do not have to purchase. You do not have to be a first-time home buyer. There's no limit on the price of home that you can purchase. It's limited by your income. So let's recap. Interest rates are taking a jump. Yeah, they took a jump. What does that mean for home buyers? Will prices come down? I don't think so. Not anytime soon, because unless of course the buyers just quit purchasing property, and at that point the sellers have to realize, well, I've got to reduce the price of my home in order to compete with the few buyers that are on the market if I want to sell my property. And will the mortgage interest rate increasing stop people from being able to afford a house? No, it won't stop you from being able to afford a house. Will it prevent you or possibly stop you from affording a house in a location that you desire? Absolutely, it can, and it probably will, but it won't stop you from being able to purchase a house. So listen, if you find these videos helpful, if you find these videos entertaining, if you find that you could learn a little bit, perhaps you could share it, subscribe to our channel. My ultimate goal and our team's ultimate goal here is to help as many people as we can and to have a profound impact on the possibility of home ownership in their life. And we can't do it without your help. So we thank you. We appreciate you. We thank you for watching. Until next time, we'll see you soon.